Welcome traders, David Dubay of Polaris Trading Group. In affiliation with Infinity Futures, this is the weekly review and preview for the upcoming week, May 30th through June 2nd, 2017. Today is May 29th. This is a Monday. It's over the Memorial Day weekend, and markets have been had a half day today. So we're going to take a look at the upcoming week. Before we get to that, let's hit the disclaimers here. NFA Compliance Rule 2-29 simply states, hypothetical performance results have many inherent limitations, and trading in futures and derivatives on futures is speculative in nature and involves substantial risk of loss. Past performance is not indicative of future results. So before we get to the charts, it is the Memorial Day weekend, and Polaris Trading Group is a supporter of the Wounded Warrior Project. So if anybody is interested and want to contribute to the Wounded Warrior Project, just go to the website here on the right hand panel. You'll see a widget icon. Just click on that. It'll link you right into the website over there at Wounded Warrior, and you can contribute accordingly to levels that you would like. So with that, let's get to see what the reviews are this week and take a look at some of the charts. Okay, so what you should be seeing here is on the left hand panel, this is a daily profile with a larger composite profile on the right hand side with a 50-day simple moving average. We put that simple moving average in there because it is a basic proxy for a lot of the large institutions to see what the overall trend conditions are, and of course we know that they've been bullish. So there was a little bit of a dip last week that actually brought us down to about 75% pullback of this low to high swing. So that's this low here up to these kind of double top high, and then we had a pullback of about 75%, okay, which is what we refer to as the last chance retracement, all right, of a swing. So basically what that means is anything greater than a 75% retracement runs the risk of pulling back deeper to test the original low pivot in the case of a pullback. All right, so what we've seen today, this past week, is a pretty strong rally off of that. We've been talking quite a bit about the 2400 level being a large strike price up in there for the options folks, and getting above that level would force potentially some short covering, and I think that's partly what happened this week here. This past week, a little bit of short covering. There was a really pretty good battleground there for a number of series at the 2400, but finally broke through that. So now price is clearly above the 2400, 2404 prior high level, and now we're in a overall bullish formation. Now, though price has penetrated, again, we want to take a look at underneath the surface. If this is a breakout that, of course, to new all-time highs, will this be, is this more likely to be sustained, or is this a pop, all right, squeeze out the shorts and then a failure and come back in? Again, a lot of people out there are continuing to put out shorts. One study I saw this past weekend was the large open interest on short side in the S&P 500. Now, whether or not that's shorts to hedge current long positions, which typically could be the case as well, but there is a fairly large outstanding short position. So whether they're just pure naked shorts or hedge shorts, as I said, difficult to tell. But the key for us and for anybody that's trading is whether or not on any subsequent pullbacks, if we see them this week, all right, will that breakout level between the 2400s, 2400s, 04s hold? Okay, so that's going to be the big question, should the market pull back this week. Again, part of the issue, for intraday traders, where most of us reside is very little pullbacks. And so, if you're an S&P trader, you just haven't had a good opportunity to get much of a rotation back, to get on board, any one of these. If you take a closer look at some of the intraday patterns here, you'll see that, you'll have a spike up and then a consolidation, another spike up, consolidation, another spike up, consolidations. There's not really any rotation that has occurred and allow potential pullback longs to get on board. That said, if you're on the short side of the market is not letting you out. In other words, with a pullback to cover some of your shorts. So with these ongoing shorts that are continuously rolling, has created a situation where low volatility and little rotation back down has continued to force prices upwards. All right. Here on the right hand side, this is just a weekly view, and for those of you who've been following our videos now, have noticed that we've had some key levels here, 72s, 81s. We've talked about 86s, 92s, all right, up through the 2400s, and then now a break from the 96 2400 zone up to the 06, all right, and then we had an 01250 which I marked. Now, what I want to bring in here is the 16s next, all right. So I'm going to just draw a line here, about 1650 actually, or 1620 I believe it is, somewhere in that neighborhood. So 24, 1620 roughly. Where do I get that number? All right. Let me bring in, this is a chart, is a point and figure chart. This is courtesy of the folks over at stockcharts.com. All right, that one of their blog posters over there, and again, I recommend you take a look at what they offer, stockcharts.com. This is a point and figure chart with targets. All right, so I'm not going to get into the mechanics of point and figure. There's plenty of educational material out there if you're interested in that. What I did want to highlight here for our review is the 24-16-21. This was a point and figure target. Okay, so based upon a count back in the month of April, all right, into May. So we're at the end of May right now, and we've gotten the 24-16 target. There are some subsequent alternate targets much higher, but the key one that we wanted to peg off of was the 24-16. So that actually occurred this past week, as you can see over here on the right-hand side chart. All right, so that was a key major point and figure target for many, and as you can see here, prices, I think it went up to just 17 3/4, something like that. So some of the major point and figure targets, based upon that prior chart, are now fulfilled. Now, what does that mean? Does that mean it's going to roll over and pull back deeply? It may. All right, we don't really quite, it's not a matter of forecasting. But the pattern here that you see on the TPO count as well as volume profile is what's called a P pattern. Okay, P for Peter. All right, so the P pattern here, as you can see, kind of an inverted P. That is the trace or a footprint of shorts getting squeezed. So again, for those of you studying profiles, you're probably familiar with that. For those of you that don't, you may want to look into that. But this is a profile of more of kind of a short squeeze type patterns. All right. So this could certainly continue, or if the shorts are not finally totally squeezed out, we could see further upside thrust. But again, the problem here, of course, has been the ability for any rotation down. In order for shorts to, on a short-term basis, get out, rotate out of some of their newly minted shorts, or as well as longs trying to get in, and now it becomes a kind of a quagmire. And the quagmire is longs don't really want to enter the markets at these levels. All right, the quagmire simply is they want to buy and wait for pullbacks to prior support or breakout points. So coming up this week, or even the next couple weeks here, we're starting to enter into the summer season now. But we, again, those that are, intraday trading and so forth would like to see some sort of a pullback. Even swing traders, test the 04 breakout point, the 2400, see if there's any rotational support in that area. Okay, so we'll see how that unfolds in the short week this week. So going into where some of the action has been this past week, take a look at our performance charts, again, courtesy of stockcharts.com. Let's see. So the lagger, of course, has been the energy group. All right, and so again, for those of you trading crude oil, I certainly have experienced that big downdraft this past week. But for the most part, all the sectors held up pretty well on an absolute basis. All right, one actually standout, we'll get a little bit closer in the rotation chart, was we're starting to see some strength in the transportation group. Okay, so let's take a look at that on our next chart, which is our relative rotation graph. All right, again, courtesy of stockcharts.com. Again, we know NASDAQ, NQ, right, has been leading. We know utilities has been leading, which is kind of a warning sign there. Transportations went from weakening to lagging over the past, several weeks. But what we're starting to see here is an upturn. So they're still in the lagging group on a relative basis, but they are starting to turn up, and that's a good sign. So at least with the breakout of the Dow Jones Industrials and the S&P, you want to see that transportation area, all right, be supported. Okay, you want to see strength in that area. So that confirms what's called the Dow theory. All right, so when the S&P, when the Dow Jones Industrials break out, okay, you want to see that Dow Jones Industrials supported with a breakout of the transportation. So the upswing so far this past week in trans is a good sign. All right, financials still kind of a bit of a laggard. All right, you want to see some of those financials start picking up. All right, as well, but they have not been able to really mount any major. So we're still kind of in this, pattern of, yes, we're grinding higher. Yes, we have all-time highs. All looks good under the surface. The advanced decline, cumulative advanced decline line is positive as well. So I'm not going to say anything negative. The patterns are very bullish. All right, it's just I think those that want to get on board on the long side are finding it difficult. Stepping in at this point, they're still waiting for some sort of a pullback to come into the marketplace, which really has not, for the most part, materialized. All right, so we'll see if that can materialize this upcoming week. For the upcoming week, let's kind of take a look. Again, today, Monday the 29th, markets are closed. All right, and we got consumer confidence tomorrow on tap, so that will be something to take a close look at. We got Chicago PMI, pending sales, home sales. Of course, we get the Beige Book on Wednesday as well. And the energy sector is, I believe, pushed out one day because of the holiday. Yep, EIA natural gas is on Thursday, and I think the petroleum report as well. Yeah, it's on Thursday as well. So those are going to be the big daddies for this week. And of course, we get the employment report. All right. Coming up on Friday. So this is going to be probably this will be the final report, I believe, before the Fed takes a look at whether or not they're going to raise rates. And I think all the signs are pointing to that rates will uptick in June meeting by another 0.25%. So unless something changes there, that's it. And that's about it, everybody. So it's kind of a shortened week, kind of a short video this week, but hope this has been informative. Give me your feedback. Let me know if you want to look at some other things. We'll take a closer look at different groups, and you can send me some feedback where you can. All right, so for those of you that, again, have not stopped by and visited with us over at Polaris, we'd love to see you. Come in, take a free trial, www.polarisTradingGroup.com/free-trial. You can go on the website and take a look. Give me a holler. Again, give me some feedback if you have it on these video series. This is kind of work in progress, so a lot of feedback from the viewers will help myself in tailoring what the reviews and previews will be from week to week. So you can reach me at david@polaristradinggroup.com. Visit us at polaristradinggroup.com, or contact Patrick Zielbauer or your Infinity Futures representative over there for any additional information. All right. Thanks very much, everybody. We will see everybody in our trading group on Tuesday. And for the rest of you, have a great trading week, and we'll see you at the next installment of the preview series. Thanks.